Hey everybody, welcome to Mortgage Today for Monday, February 5th, 2024, and oh, what a day it was. UMBS were down 25 basis points in early trading. The 5.5 coupon was down 41 basis points. Fed Chair Powell talked to CBS. Fed Chair Powell told Fed Chair Powell spoke to CBS Sunday yesterday and said that the central bank would be cautious about rate cuts and that the Fed was still searching for additional evidence of inflation returning to the Fed's target of 2%. Powell also concluded that the pace Powell also concluded that the pace of rate cuts would be likely slower than the market is anticipating. The unemployment report released Friday showed unexpected signs of resilience, with payrolls far exceeding the forecast. The chance of a quarter-point easing in March fell to almost 10% after Powell's comments. Just 4 weeks ago, a move by then was considered a near certainty by investors. The pickup in average hourly earnings and overall strength in hiring suggests the odds of a rate cut in March are likely fading, but the drop in the average workload to 34.1 hours from 34.3 hours reflected weakness below the strong surface. While investors and average Americans are eager to see the Fed unwind some of its interest rate hikes, the central bank is expected to hold rates steady for the fifth consecutive meeting in March. Investors said they'll be paying close attention to the lineup of central bank speakers this week for more clues about the direction of monetary policy. Chicago Fed President Austan Goolsbee is scheduled to speak on Bloomberg TV today, while Cleveland Fed President Loretta Mester and Minneapolis Fed President Neel Kashkari are due to provide remarks on Tuesday. Services PMI came in at 53.4 on a 50.5 previous. It was 52.9 forecasted. New orders rose to 55 versus 52.8. Employment rose to 50.5 versus 43.8. Pretty self-explanatory outcome here. ISM Services is a more meaningful of the two ISM PMIs. There was some asymmetric risk due to last month's exceptionally low employment component. Now, this report reverses that move in addition to coming in stronger at the headline level. Zillow thinks the hottest real estate market in 2024 will be Buffalo, New York. The other hot markets are Cincinnati, Columbus, Indianapolis, Providence, Atlanta, Cleveland, Charlotte, Orlando, and Tampa. So you can see the estimates that they are coming up with there for news, data, and stuff of future markets that might be doing great. Potential migrants to Buffalo should Google the term lake effect snow before they make that decision, though. Bonds sold off again today, but this time in several distinct waves. The first wave occurred instantly as trading opened in the overnight session. 10 years jumped immediately from 4.02 to 4.08 as investors reacted to Powell's 60 Minutes interview, which reiterated that strong economic data means the Fed is in no hurry to cut. Stronger economic data in Europe pushed EU yields higher, kicking off a second wave of selling and taking 10s to 4.12. Then in U.S. hours, a broadly stronger ISM Services PMI kicked in the third wave, taking yields over 4.16 by the 3 p.m. close. With that, bonds are basically back with January's highs unless you ask shorter-term bonds, which are more influenced by Fed fund rate decisions and expectations, which are the highest since December 13th Fed announcement. UMBS closed the day down 25 basis points on the 6.0 coupon. 5.5 lost a half a point, so closing out at 100.77 is putting us right in this range, so we're below three pretty strong ceilings. So we have the 50-day moving average, the 25-day moving average, and this really, really strong Fibonacci that we just can't hardly seem to break through unless you go back quite a ways. So that's going back into December. So got some tough ceilings on that. In other news, just as UWM is turning up the heat on pricing, Fairway Independent Mortgage is calling it quits on its wholesale channel. The late-breaking news happened on Friday in the new business. We all know that when people make these announcements because they think no one is watching on Fridays, while $2.5 billion they generated in the channel may not have been huge, it makes us wonder what that means for the competition. Specifically, meaning, if you remember, right, the UWM ultimatum is you can't work with Fairway or Rocket, but now with Fairway leaving the market, seems more directly, and that could have an impact on the legal stuff going on between those two big players. Also in legal news, Keller Williams has agreed to pay $70 million to settle their Sitzer-Burnett price fixing case in Missouri, which is particularly interesting because that's settling down from $600 million that they lost the case. So what does that say about the plaintiffs' prospects of winning on appeal? But then again, they're paying $70 million for doing something that they say they didn't do. So paying $70 million because of something you absolutely didn't do also says some weird things.